Welcome to the Silent Trading channel. Today I'll be analyzing the gold chart on Wednesday, the 14th of January. And firstly, I'll be looking at the daily time frame today or the daily candle. But first thing first, please subscribe, like, comment, and share if you like this video. And please support me through all of my content creating around what I'm doing, about what I'm gonna guide you guys on how I trade. I'm gonna guide you guys on how my theory works out, right? So today we'll start by looking at the daily time frame. As we see in the daily time frame, what we know on the basics of chart is almost every candle has to have a bottom and a top wick, right? So when we see a candle without a bottom wick or a candle without a top wick, there will either be closing. Before closing, this candle may even pull back and create a bottom wick, or close as a body candle up here, or body candle close up above previous week, and then tomorrow's candle may even push down to create a bottom wick, right? This is what I call a bottom wick, right? Replacing the previous candle that hasn't created a wick, because every candle needs to create a wick, because they are always imbalanced in the chart, which means if today's daily candle doesn't close before dropping down and creating a bottom wick, this is what it will do is the next candle tomorrow may even push down to create a bottom wick in place of this candle here before pulling back, or either pushing down to create a bottom wick and then push down and then down further, because by pushing down to touch support over here, which means buy limits are triggered, which means buyers are entering into the market, right? So when buyers are entering into the market, it is where the market will start clearing off buyers. Then if the market needs to clear buyers, the market needs to push down further and further, at least as low as it could, right? Creating a new low before touching the next support. So by price pushing down before the next support, but not touching the next support, because touching the next support means triggering buy limit, which means triggering buy limits causes the price to go down further. So price would either drop down tomorrow, right? Price would either pull back from today to create a bottom wick, or full body candle close today and then tomorrow a push down before pulling back up, or a push down creating a new low before the next support and then start reversing over here. So this is what the chart is going to do, because as we see right now, if we are looking at a lower time frame, we can see that the chart is slowly climbing up, or what we call is a sideways up phase, because it isn't in a sideways box, but it is going on a sideways up, which means by price going on a sideways up, it is trying to attract sellers into the market. So if sellers start coming into the market, that is where the price is going to move. So if sellers are starting to accumulate, price is going to slowly move up and up and up, right? And when price needs to move, the price or the market always need to have some kind of volume, be it a buy volume or a sell volume, right? And as we can see, the price action right now is to the buy side, or we call it the bullish price action, because this reversal over here was completed by the second candle here, right? A weak push down creating a weak and then pushing up and closing above resistance, which means the price is now creating a higher high and a higher low. You can see, right? This is a higher high, this is a higher low, this is a higher low, and over here is a higher high over here, which means price is slowly climbing up. It isn't gonna break out anytime soon, because when price needs to break out, accumulation needs to be complete. So by accumulating, the price would have to be accumulating sell volumes from people selling and looking for the price to reverse over here, which means if price is gonna break, there would have to be enough sellers for the price to sweep and switch off their stop loss, right? And if the price is trying to move up and there are people panic buying, right, or panic or follow buying, that is where the price is going to push up. And when people panic buy, the price is going to pull back and then push down and then dump on the whole price, because when buyers are too much in the market, when there are too many buyers in the market needs to clear off buyers. And when the market needs to clear off buyers, the market needs to dump on the price, right? Why do markets need to dump on the price? The price dumping is due to the market pressuring buyers to close their position, correct? So when we need to buy right now, we are not going to be buying over here because this is a consolidation phase, right? A consolidation or a sideway. And I'll call this a sideway up phase because a sideway up phase is what we call a slow climb above, right? It isn't on a breakout. It isn't going to break below. But this is the phase where price are waiting to break above or break below, because if there are going to be many buyers in the market or the market is going to accumulate buy stops over here or above this candle wick, right? When people place buy stop above what? Above the current price, waiting for the price to break above and getting their buy stop triggered. So when a buy stop are triggered, they get position, right? So if the buy stop are triggered around here and the price is moving up and there are too many buy stop triggered, right? When the price push up and buy orders are too much in the market, the price is going to reverse and dump down, correct? But if the price is going to push up and there are too many sellers instead, because sellers start selling at resistance, so when there are too many sellers instead, the price is going to retrace only a bit because they're not allowing the sellers to clear out their position at break even. So the price is only going to retrace a bit and then push up further. So as we can see, if we are looking at psychology, right, when we are trading, we need to be able to know at which spot there will be buyers and sellers, because the market is always in a way of clearing off buy and sell position or buy and sell volumes, because price needs to break above or either price needs to break below. But before breaking either above or below, price needs to clear off all buyers or sellers, because the market never allows majority of the people to profit with the market. Majority of the people would be in a loss. They will not be profitable. So when there are too much sellers, the price is going to break above. And when people start buying, right? People start buying at support, at retracement. And then when there are too many buyers is where the price is starting to reverse and then retrace and then reverse down. Correct? So when we play according to the trend. We play according to the price action. If the price action is to the bullish side, we are going to wait for the price to create a bottom wick before we buy. Or we are waiting for the price to retrace before we buy, right? And if the price action is in a bearish side, we wait for the price action to be complete before retracing, and we sell at the retracement, correct? And we sell at the retracement, waiting for the price to drop below and then break support and then break below. So when we sell at this spot over here, we are gonna be taking a profit at below support, creating a new low, right? Before the next low, it is where we take our profit. And then we wait for the price to reveal something to us. We wait for the price to tell us something through what? Through price action, which means if price start reversing over here after creating a new low, right? Start reversing and start pushing down and not touching support, correct? And then pushing up. Pushing up what? Pushing up to break resistance. And then the next candle drop down over here, or the next candle retracement, it is where we buy. But for those of you guys who are prone to having risky trade, you will be buying at the next candle over here, because you will not be waiting for the price or for the chart to complete its reversal. You're going to be buying as quickly as you could over here, which means your price would have been better than what I'm telling you guys to buy over here, right? But it isn't too much better, and what I'm telling you guys is you are risking more percentage of your portfolio than buying and buying over here. Because why? Because when reversal isn't complete yet and you're buying over here, there are still risks or chances of you getting your stop loss sweep, correct? But if you wait for the reversal to be complete, right, by pushing up and then break resistance and then a retracement below is where you buy, this will have more chance of the price action going on its structure, right? Because when a reversal is complete and then when the price retrace, this is where we buy, because a complete reversal means a price action to the buy side or the bullish side has been strong, has been completed, and then when we buy after the next retracement or the next week candle, on the next candle creating the bottom wick over here, this is where we buy and then wait for the price to break above more. So when the price break above more and is able to break resistance and the next candle retracement, it is also where we are going to buy again, right? So as we can see that I always wait for the price to reveal something before I enter a position. I never enter a position like this. I wait for the price to drop before the next support. That is where I'm going to enter my position over here, or either the wick over here. But if the price is not showing me anything, I'm not going to buy, because I don't know whether the price is going to clear off buyers or the price is going to break above and clear off sellers. So I wait for buyers and sellers to be clear, which means if price are going to drop down, triggering buy limits over here, attracting buyers over here, attracting buyers over here, and then dump on the price, it is where I'm going to start buying, because buyers are trapped above, right? Buyers are either trapped above or pressured into closing the position. So I'll be buying at the spot where buyers are trapped and pressured into closing their position, which means if their portfolio is gonna be in a sharp drawdown or heavy drawdown below, they're gonna have to close their position, right? They're gonna have to save their portfolio, not allowing it to suffer more damage. Which means by buying below over here, when the price break below, this is a good spot to buy, because when buyers are clear off from the market and the market push down over here, and if reversal start over here and the price start pushing up, creating higher high and higher low, this is where the perfect position will be. You understand me? So if the price is going to push up, it is the same concept, because if price push up, attracting sellers and then pushing up to clear off sellers from the market, then I will start selling, right? While other sellers are trapped over here, but I'm gonna be selling over here. And when price start reversing and then push down, breaking support and then retrace, but not triggering sell limits, that is where I know that my sell position or my sell orders is safe and price is now looking to push down, correct? So every time you enter a position, wait for the price to reveal something, either a break above or a break below, because by breaking, the price is telling you that they are clearing off volumes from either side. Then after clearing off volume, that is where you're going to enter a position. Okay, so for today, this is all I'm going to say, because I'll be slowly guiding you guys onto how I trade with all my knowledge, with all my experience, and I'll be telling you guys more and more of my experience trading, about how I have been doing it, how I've been profitable consistently for about a year right now, and wait to see and wait to learn with me as I guide you guys into the way of trading, into the way of I'm trading, right? So for today, I'll be seeing you guys tomorrow. See ya.